Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today, we're analyzing an important statement circulating among Iraqi Dinar followers. The idea that if Iraq is not getting closer to forming its government, and if regional war tensions are escalating, then this could be delaying progress tied to the exchange rate. The statement also suggests that government formation is the linchpin to any potential rate change. Let's break this down carefully, professionally, and from an economic standpoint. First, we need to clarify what government formation means in the Iraqi political system. In Iraq, after parliamentary elections, political blocs must negotiate alliances to nominate and approve key leadership positions, including the prime minister and cabinet members. These negotiations can sometimes take months, depending on political divisions and regional tensions. Political consensus is especially important in Iraq's power-sharing system, where representation across different sectarian and political groups plays a central role. Historically, delays in government formation have created periods of policy stagnation. During these times, budget approvals can slow down, economic reforms may be postponed, and investor confidence can weaken. However, it's important to separate political developments from automatic currency outcomes. The exchange rate of the Iraqi dinar is not directly controlled by political speeches or short-term political events. It is managed primarily by the Central Bank of Iraq, often referred to as the CBI. The Central Bank of Iraq operates under a managed exchange rate framework. For years, the dinar has been stabilized against the US dollar through foreign currency auctions and monetary policy tools. The official exchange rate has typically remained in a controlled range, with adjustments made when deemed necessary for economic stability. For example, in late 2020 and early 2021, the government approved a devaluation of the dinar to address fiscal pressures caused by falling oil prices and budget deficits. That decision was based on macroeconomic conditions, not solely political formation timelines. Now let's examine the argument that government formation is the linchpin to a rate change. There is some economic logic behind the idea that political stability supports currency strength. Stable governments can pass budgets on time, implement reforms, reduce corruption, and encourage foreign direct investment. All of these factors can improve economic fundamentals. Stronger fundamentals can, over time, strengthen a country's currency position. However, it is important to stress that a rate change, especially a significant upward revaluation, is not simply triggered by forming a government. Exchange rate policy depends on multiple structural factors. Iraq's economy remains heavily dependent on oil exports. Oil revenues account for the majority of government income and foreign currency reserves. As long as Iraq maintains a rent-based oil economy with limited diversification, the exchange rate will largely reflect oil market conditions, fiscal discipline, inflation control, and foreign reserve levels. When discussing war or regional conflict, the impact becomes more complex. Iraq is geographically positioned in a sensitive region. If regional tensions escalate, markets may respond with caution. Investors tend to move capital away from perceived risk environments. This can affect local markets, bond yields, and currency demand. However, in Iraq's case, the dinar does not freely float in global markets like major currencies. Its value is maintained through central bank mechanisms. Therefore, while war-related uncertainty can slow reforms or delay investment, it does not automatically cause dramatic currency swings under a managed system. That said, prolonged instability can indirectly influence economic progress. If political leaders are unable to form a cohesive government, key economic initiatives may stall. Infrastructure projects could be delayed. Foreign companies may postpone entry. Banking sector reforms might lose momentum. These slowdowns can affect long-term growth potential. In that context, the statement that war or political deadlock may delay broader economic transitions has some credibility. But again, delay does not equal collapse, nor does it automatically signal an imminent currency event. For Iraqi dinar followers, it's essential to view these developments through a macroeconomic lens. The value of the dinar depends on Iraq's foreign currency reserves, which are built primarily through oil exports. In recent years, Iraq has at times reported relatively strong reserve levels, providing the central bank with a buffer to defend the exchange rate. As long as reserves remain healthy and oil prices remain supportive, the CBI has tools to maintain relative exchange rate stability even during political uncertainty. Short term, if government formation continues to stall due to regional conflict or political disagreements, we could see slower legislative progress, delayed budgets, and cautious market sentiment. This may limit economic reforms that some observers believe are necessary before any structural currency adjustments. The central bank is unlikely to introduce major exchange rate changes during periods of political uncertainty, as monetary stability tends to be prioritized in times of risk. In the long term, however, sustained political stability could create a more favorable environment for gradual economic strengthening. If a new government forms with a clear reform agenda, focusing on reducing corruption, strengthening the banking sector, modernizing digital payments, and diversifying away from oil, these structural improvements could enhance Iraq's economic credibility. Over time, improved productivity and diversification can support currency stability. But these are multi-year processes, not overnight transformations. It is also important to address the emotional element in the statement, "This is your investment." While many individuals follow the Iraqi dinar closely, it is crucial to approach any currency-related decision with caution and proper risk management. Currencies tied to developing or emerging economies can be volatile, especially when dependent on a single commodity such as oil. Investors should avoid assuming that political headlines automatically translate into guaranteed currency movements. From a purely economic standpoint, government formation does matter. Markets prefer clarity. International organizations such as the International Monetary Fund and the World Bank often emphasize the importance of institutional stability. Credit rating agencies also assess political risk when evaluating sovereign debt. If Iraq demonstrates strong governance and consistent fiscal planning, that can gradually improve international confidence. Improved confidence can influence capital flows, which indirectly affect currency stability. However, even in an ideal scenario where government formation proceeds smoothly, any change to the exchange rate would likely be incremental and strategically managed. Sudden and dramatic currency appreciation is rare in oil-dependent economies without significant structural transformation. Policymakers typically avoid large revaluations because they can hurt exports and create economic distortions. Let's also consider inflation. Domestic price stability is a central bank priority. If regional war pressures increase import costs or disrupt trade routes, inflation could rise. In that case, the central bank's focus would be on maintaining purchasing power and financial stability, not on strengthening the currency artificially. Stability tends to take priority over appreciation during uncertain periods. Another key factor is the federal budget. Iraq's budget depends heavily on projected oil prices. If war tensions impact global oil markets, Iraq could experience higher revenues if oil prices rise, or revenue uncertainty if exports are disrupted. Budget clarity requires a functioning government capable of passing spending plans. Without that, fiscal planning becomes reactive rather than strategic. Again, this ties back to economic management rather than immediate currency shifts. In practical terms, what does this mean for IQD followers right now? It means that political developments should be monitored, but interpreted carefully. A delay in government formation may slow economic reforms. Regional war tensions may increase caution, but the exchange rate remains under the authority of the central bank, guided by reserves, oil revenue, inflation data, and monetary policy objectives. Short term, expect continued emphasis on exchange rate stability. The CBI has historically defended its official rate through currency auctions and regulatory measures. Long term, meaningful currency appreciation would require sustained economic diversification, reduced reliance on oil, improved private sector growth, strengthened institutions, and increased productivity. Those are structural reforms that extend beyond a single election cycle. It is also important to understand that political delays are not unusual in Iraq's post-2003 system. There have been previous periods where government formation took months. During those times, the exchange rate did not suddenly spike upward or collapse downward purely because of cabinet negotiations. Monetary authorities generally maintain continuity regardless of political turnover. In summary, the statement that government formation is linked to economic progress is accurate in a broad sense. Stability supports reform. Reform supports growth. Growth supports long-term currency fundamentals. However, it is an oversimplification to say that forming a government directly triggers a rate change. The relationship is indirect and influenced by multiple macroeconomic variables. Regional war conditions may indeed delay political consensus. They may slow reforms. They may increase short-term uncertainty. But Iraq's currency framework is designed to maintain stability even in turbulent periods. The key variables to watch include oil prices, foreign reserve levels, inflation trends, fiscal discipline, and central bank policy statements. For viewers following the Iraqi Dinar, the most responsible approach is to stay informed, analyze developments critically, and avoid emotional reactions to headlines. Political events matter, but they are part of a larger economic equation. Sound decision-making requires looking at the full picture, not just a single variable. As always, we will continue to monitor official announcements, central bank data, and verified economic indicators. If there are confirmed policy changes, we will break them down in a clear and balanced way. If you value factual, responsible analysis without hype, make sure to subscribe to the channel and stay updated with real developments about the Iraqi dinar and Iraq's economy. And remember, this content is for informational purposes only and should not be considered financial advice. Always consult a qualified financial professional before making any investment decisions.